America is going through a very tough financial depression state right now. It is hard. I know a lot of you are dealing with some of the intense pressure of trying to balance and upkeep with bills and all these things happening. But one of the things that is bothering right now is the state of being able, people carrying over a lot of credit card balances over, as well as people tapping more into their 401k. Right now, it's kind of like not the time for you to be doing these risky things, especially your 401k. You know the value of asset stocks, they're down much more before. Therefore, the value of the assets is lower inside of your 401k than they were about 2 years ago in 2021 when things were going super crazy. So it's not really the best time for you to dip in. You got to dip in when the market is high, and that's when you borrow against it. Of course, there may be some hardships that you got to deal with, and that's when you have no choice, right? But don't just go into there if you have other alternatives, and try to leverage as much of your own cash as you can during these times, so that way you're not touching your assets, you're not liquidating everything and converting those into cash. So be very careful. And of course, if you have any questions or anything that you feel like you need help with, you want to discuss and chat with me, drop your contact in the comments below. You could always shoot me an email. That's hustle@luxtreaux.com. I will put in the description below, so that way you can reach out to me directly. But let's take a look at the economy where it's at right now. Interest rates have gone up again, as we have seen last month. Interest rates for mortgages are getting close to 7.5%. Many lenders are charging 7.5% because they have to make a markup off of the market rate, the wholesale rate that they're purchasing, that the government has allowed them to purchase at. So therefore, they have to be able to make some type of profit in return. So that's why at the 5.25% that the feds are at right now, right, they have to charge 7.5%, so they could make 2% extra on their money over the course of the term of the loan in order for them to progress. So you got to be very careful in terms of your purchase as well. If you're buying a home for your family, make sure that you have enough cash reserves for 6 months, a year, to be able to protect that. If you're buying a property that you're offsetting, which is what I do encourage you for you to do and look into now, that way you can offset the cost, and you're also mitigating the risk. You're making it less risky, because if you have part of it that you're renting out, then part of it is covered by somebody else, right? And you're covering your other portion. Of course, you're still responsible as the landlord to make all the repairs, but you're still lowering your risk, because now you have another offset against that. It's not all on you. But when it's all on you, you lose your job. At the end of the day, you're just relying on your own financials. And at that point, you're going to start panicking. So single family options right now is very risky, that I see it as, unless it's a home that you already got already. If you got in at that low interest rate, you're good. But in terms of purchasing right now, it's risky. Unless you got your stable business and your financials are together, then you're all good. You have nothing to worry about. But if you know that you don't have the means to last 6 months, a year, cash reserves, and you're going to go and buy a single family just to live in, I really encourage you to reconsider. I'm not giving you financial advice, but just speak and calculate these things further to a financial advisor, your lenders, and everything. At the end of the day, you have to make the best decisions for you. You can get advice from all these people, but you have to be the one that takes charge and push the gas on the car pedal. The stock market, it's at a very uneasy path right now. Some stocks go up slightly and they go down slightly. It's not at that bull run rate. It's not happening. Right now, things are still pretty low, which is why I'm dipping. Last week, I bought much more Workhorse. I had a royalty statement from my music business that came in, as well as some other payment. It was about $1,000. I purchased $1,000 worth of Workhorse inside of my ordinary Robinhood account, right? The next things I want to purchase is more Grayscale. I see that they're going down furthermore. Like BCHD went from like almost $3 to now being $1 and change. It's crazy. It creates opportunities, right? But look into Grayscale stocks for some things you get into. But today's video is not really focused on analyzing stocks, but it's a mixture of the market in overall. I'm really pleading you. There are consequences to you making financial decisions right now that is going to hurt you down in the long run. Everything you do right now really counts. When things are tough, the economy is going through this the depression that is going through right now. We are in a recession. We've been in one, and it's going to be some time before we come out of one. No matter what the news media outlet tells you that we are not in one, just be very careful. It pretty much, when you see inflation is so high, lending has become tough, interest rates are high, and the economy are starting to struggle. People are liquidating part of their 401k. People are carrying over a lot of credit balances from one place to another. They're misusing credits. We are in a form of recession. And it might take some time for the media to really look at it that way, right? But don't make sure you're equipping yourself, you're getting educated. I'm just one person. There are many other people on here on this platform that you can actually get much more advice from, as well as learn about, so that way you can be equipped to make the decision for yourself, because not everything works for everybody in the same way. You want to make sure you learn as much as you can in order for you to overcome. But those are some of the things that I'm seeing going on right now, which you have to be very, really careful. Like for me, a retirement account I had started pouring money into since 2017. I was working at this job at the time, and they did a lot of matching. And in total, from 2017 to 2019, I probably put in maybe about 40,000 in value. No, 50, maybe, yeah, about 50,000, right? But then the market slumped a little bit, right? This is when Trump finished like going through the trade war in 2019, and it started rebounding just slightly. So I took half of that in order for me to purchase my home. You are allowed up to 50% of your retirement, but up to $100,000. Up to $50,000. I'm sorry. Up to $50,000. So if your 401k has a balance of $100,000, then you could take up to $50,000. If you have a balance of $200,000, you're still capped at that $50,000. But it cannot be no more than 50% of the value of the 401k, and you are capped at $50,000 mark. So I took about $18,000 out of that and to purchase the home. I'm paying that back as a form of a loan. I didn't liquidate it. I took it as a form of a loan, so I'm making monthly payments of about $400 every month in order for me to pay that off, right? So I still had $18,000 balance left in there. And as I'm paying it back slowly, and it started growing, I really stopped contributing to that 401k. I think at the end of 2019, the value of it probably reached at like 30,000. And we already know what happened in 2020, right? The market went back so low. So the value of the 401k at its bottom was around like 36,000. And right now it's about $100,000. And I'm just paying back that $18,000 loan plus the original, let's say about $40,000. So the value of it pretty much almost tripled. I know at the peak before I even finished paying the loan. And even right now, the market status being so bad, it's about $100,000 in value right now at this moment. I have not tapped into it for anything else. I don't plan on tapping into it. As soon as I finish paying it back, my last payment is in February of 2024. This is another strategy you can try, because I did it, but I did things that I knew I was able to handle. I knew I could handle a $400 a month payment, and plus it's a multi-family purchase that I was doing where I was able to offset some of the costs on a monthly basis, right? I live in part of it and I'm renting part of it. So my risk was very much mitigated in that sense. The risk wasn't as high because I wasn't concentrated only on my sole income in order for me to keep this running at all. So don't just tap into your retirement just for any sake. It got to be for investment purposes. Don't just use credit just to use the sake of credit so you could go shopping. It got to be for the sake of you building some type of investment, some type of return. There are consequences for you doing this right now. And there are consequences for you making good financial decisions. It's a negative consequence because it is a benefit, right? No matter what, you're paying consequences for whatever choices that you make. But some of it could be a negative consequence, meaning it's good, and some of it could be an actual consequence when it is bad for you and it ends up hurting you. Because if you're getting into a situation where you really need that money and you use that credit in order for you to go shopping and do these things, you're not going to have it when the investment opportunity comes, because there's going to be a bloodbath. I feel that is going to come. I don't think it's going to be as bad as it was in 2008, because it seems like what the Fed is doing, increasing the interest rates, easing down, slowing down purchase, the housing supply is still tight, which is what's keeping house prices pretty high at this moment. If the supply went further down, demand would have still been like pretty high. But we are at a very tight situation. But once interest rates go down, it makes people feel more comfortable about lending, and they feel like they can get more house for their buck now, they'll go out and buy, and that should increase supply, which means that demand should now lower, and it should bring home prices further down. But those are some of the things that you got to really pay attention to the economy, and you want to make sure you're ready at that point in time when it comes, that you're able to get that next purchase. So you have to be very careful with how you're treating your financials right now at this moment. Don't just do things, purchase things out of the sake of your own pleasure. I'm not saying for you to not have a little bit of pleasure. You got to do that, right? But allocate a smaller portion than you would normally do. Don't just take half of your income, your earnings, and put it towards just leisure and pleasure, right? Maybe 5%, maybe no more than 10%. You have to really allocate it. Like my rule of thumb right now, I'm close to the 20% mark in terms of my donations that I do. That's to many churches as well as charitable organizations. So 20% of my income goes there. The other portion is about the home expenses. So I think about maybe 15% goes towards the home expenses. Again, some of my mortgage is offset because I'm receiving rental income. And then some of that I have to allocate towards repair. And I think I allocate maybe 30% towards investment, right? Because my cost of living has tremendously gone down because of the fact that I have these offsets. I've been able to invest in different things that's generating different incomes. So my cost of living has tremendously go down in that sense. Therefore, I'm able to save a lot much more. So that leaves me with about 40%, right? With the other 40%, I could pretty much do whatever I want. But most of the time, if I'm not fixing things with the home or trying to allocate another investment, I'm keeping it in cash so that way I can pay my taxes, because I am a business owner. I have to pay my own taxes or some other expenses for the company that I got to do, as well as advertising for the company and just building it up. So I have a lot much more capabilities in that sense. But you see that I do allocate a good amount, a good chunk towards being able to save as well as invest, so that way I'm prepared for what's to come in the future. So I want to encourage you to do that. Try it out. Set your income in percentages. Allocate, minus rent, minus your expenses, which are rent, utilities. I know everybody needs their cable or streaming, but try to limit it down as much as possible. If you could just get Netflix or the basic Hulu package just for now and just have your internet service running. I did that for a long time. I was paying Optimum $40 a month and only had Netflix at $15 and Hulu at $10 a month, right? So in total, I was spending $70 on my entertainment in that sense, right? You have that. You got your groceries, which for me right now, since I'm married, I probably spend about $600-700 a month. But previously, I was spending about $400 a month in groceries and such. So once you subtract these things, see how much money you got left over, right? And take that, allocate it towards charity donations. I encourage you to do that, because when you give, you're freeing your reserves so that way you have more space to receive. And the blessings is going to come to you. And when I say blessings, I don't just mean money. There's opportunities, there are business ventures, there are wisdom that may come to you. But at the end of the day, it does, yes, increase your wealth, increase your capability to receive more money, but that's not just the benefits that it provides. So that's another thing I encourage you to do. And then the rest of it, you got to allocate some towards retirement. Well, retirement should automatically come off of your employment, right? If you're W-2 income. If you're self-employed, you got to do it yourself. But I do believe that you got to set aside a good chunk towards those things. But after retirement is have investment accounts, which you can put money inside of, right? And actually purpose it to keep buying mutual funds, index funds continuously if you're not a savvy investor. But if you're more savvy, I do share some stocks here and there. Not financial advice. It's just for me sharing what works for me. And you take whatever you want with it. I'm just sharing information. That's all it is. I'm not giving you actual financial advice. So I hope you take insights into all these things. And of course, if you have any questions, drop me an email, hustle@luxtreaux.com. I'll put it in the description below. So peace and love. Strive in everything that you do. Trust in Jesus. Have an amazing one. Hustle, 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 step.